Welcome to News Edge, your sharpest source for daily headlines and deep dives. If you're new here, don't forget to hit that subscribe button and stay ahead of the curve. Good evening. Tonight, we're diving into a story that's making waves across the nation and sending shockwaves through the financial world. Let's talk about money, a truly staggering amount. Not just the kind of money you find in a billionaire's vault, but a sum so vast it's almost hard to comprehend. Today, August 10th, 2025, the U.S. Treasury announced a record-breaking $100 billion in Treasury bills. This is the largest single-day borrowing in American history, and it's sending ripples through every corner of the economy. That's billion with a B, 100 of them. To put it in perspective, that's more than the annual GDP of many countries combined. If you spent $1 million a day, it would take you over 27,000 years to spend $100 billion. Imagine starting at the dawn of civilization and still not being finished today. This isn't just a big number, it's historic, shattering all previous records for a single government IOU sale. Economists are calling it unprecedented, and for good reason. Imagine the government walking into the world's biggest pawn shop, asking for a loan that could buy several small countries. It's a move that signals just how urgent the situation has become. This signals the U.S. debt situation has entered a new, alarming phase. The warning signs are everywhere, and experts are sounding the alarm. Financial markets reacted instantly. The Dow dropped, investors panicked, and economists scrambled to make sense of what this means for the future. This isn't just another headline, it's a flashing red light for the American economy. It's a wake-up call that can't be ignored. The government is borrowing at a pace we've never seen just to keep the lights on. Every night, officials work overtime trying to manage a mountain of debt that keeps growing. It's not for new projects, it's to pay overdue bills. A desperate short-term fix that only delays the inevitable reckoning. The pressure is mounting and the options are running out. Tonight, we're going to look at where this road leads, what it means for everyday Americans, and how the choices made now could shape the nation's future for generations to come. Let's break down Treasury bills, commonly called T-bills, so you can finally understand what all the fuss is about. These are some of the most talked about financial instruments in the world, but for many people they're still a mystery. So what exactly are T-bills, and why do they matter so much? A T-bill is basically a short-term IOU from the US government. When you buy a T-bill, you're lending your money to Uncle Sam for a set period, usually just a few weeks or months. Imagine you hand over $100 to the government today, but instead of paying you interest every month, they simply promise to pay you back a little more than you gave them when the T-bill matures. For example, you might pay $99 now and get $100 back in a few months. That extra dollar, that's your profit. Now scale that up. The government isn't just borrowing from you. They're borrowing from massive investment funds, foreign governments, banks, and everyday people all over the world. It's a global operation, with trillions of dollars moving in and out every year. For decades, T-bills have been considered the safest investment on Earth. Why? Because they're backed by the full faith and credit of the US government, which has the unique power to tax its citizens and even print more money if needed. That's a level of security few other investments can match. When the government needs to raise money, it doesn't just set a price and hope for the best. Instead, it holds a massive auction. Picture a room full of the world's biggest investors, all bidding to lend the government billions of dollars. The question is, who wants to lend us $100 billion, and at what price? Investors from every corner of the globe compete, often accepting lower and lower interest rates just for the privilege of keeping their money safe in T-bills. Safety in this case is worth more than a high return. This system works beautifully, as long as everyone believes the US government will always pay back what it owes. That trust is the foundation of the entire T-bill market. But here's where things get tricky. The government isn't just borrowing pocket change anymore. With each new auction, it's asking for hundreds of billions of dollars, sometimes every single week. That's not just lunch money, that's your retirement, your savings, your future. At some point, lenders, big and small, start to wonder, is it really safe? Will I always get my money back, no matter how much the government borrows? When the government sets a new record for the amount it needs to borrow, it puts that trust to the test. Investors get nervous, markets get jittery, and headlines start to warn of trouble. Suddenly, everyone from Wall Street bankers to regular folks starts questioning whether the borrower, the US government, can really keep up with its promises. And when that trust is shaken, even just a little, it puts the entire financial system in a dangerous and uncertain place. Why does the government suddenly need so much cash? It's not for a Death Star, it's to cover a massive gap between spending and revenue. The US spends far more than it collects in taxes, and the gap is growing. Most spending is on mandatory programs like Social Security, Medicare, and Medicaid, costs that keep rising. Add a huge defense budget and interest payments on existing debt. We're borrowing money just to pay interest, a financial doom loop. Recent stimulus packages and slow tax growth have made things worse. The government's checkbook is deep in the red, so it borrows more and more. This $100 billion T-bill is a direct result of that widening gap. It's not a strategic investment, it's a scramble to cover immediate costs. The government is digging for loose change in the global financial sofa, only this time the change is $100 billion. You've probably heard the term debt crisis tossed around on the news, but what does it actually mean for you, for the country, and for the world? Let's break it down in simple terms. A debt crisis happens when lenders, think banks, investors, even other countries, suddenly start to doubt whether they'll ever get their money back. It's not just about numbers on a screen, it's a real crisis of confidence that can shake the entire financial system. Imagine you have a friend who's always borrowing money. He already owes everyone in the neighborhood and now he's lost his job. Would you feel comfortable lending him more? Probably not. That's exactly how investors start to feel about a country deep in debt. For a country like the US, the question becomes, can we really afford to pay the interest on a staggering $35 trillion in debt? Investors start to worry, and those worries can spread fast. When that doubt creeps in, investors get nervous. They demand higher interest rates to make up for the extra risk, which makes borrowing even more expensive for the government. Higher interest rates mean the government has to spend more just to pay off old debts. That leads to bigger deficits, which means borrowing even more money, which pushes rates up further. A vicious cycle known as a debt spiral. It's like trying to put out a raging fire by pouring gasoline on it. The problem just gets worse and harder to control. If investors stop lending altogether or demand sky-high rates, the government faces a terrible choice. Either default on its debts, which means not paying back what it owes, or print more money to cover the bills. Defaulting would send shockwaves through the global economy, causing a meltdown in stock markets, banks, and businesses everywhere. The effects would be felt worldwide, not just in the US. Printing more money might sound like an easy fix, but it leads to hyperinflation, where prices skyrocket and your savings lose value overnight. Just look at countries like Zimbabwe or Venezuela for a glimpse of how bad that can get. A debt crisis isn't just a Wall Street problem, it threatens everyone's economic security, families, workers, retirees, and business owners alike. It can mean lost jobs, closed businesses, and shrinking paychecks. It's a direct threat to your job, your savings, and the value of your money. Even if you don't follow the markets, you'll feel the impact in your daily life. The very foundation of our economy, trust in our money and our government's ability to pay its bills, is at risk during a debt crisis. That's why today's record levels of government borrowing are so alarming. Every new loan adds to the pile, making the risks even greater. The warning signs are flashing bright red. If we don't pay attention, the consequences could be severe for everyone, not just in the headlines, but in our homes, our jobs, and our future. The government's debt isn't just their problem, it's yours. When the government pays more to borrow, so do you. Mortgage rates rise, making homes less affordable. Car loans and credit card rates go up too. If the government cuts spending to manage debt, jobs are lost and services shrink. If it prints money, inflation soars. Your paycheck buys less. Your retirement savings are at risk if markets crash. A debt crisis makes it harder to buy a home, own a car, or plan for the future. It's a direct hit to every American family's financial security. This isn't abstract, it's your wallet on the line. The consequences are real, and they're coming soon. Let's compare the government's finances to yours. Imagine maxing out your credit card, then asking for a higher limit and more cards. In real life, you'd be cut off, credit destroyed. But the government just raises its own debt ceiling and keeps borrowing. That's how the national debt ballooned to $35 trillion. If you needed more money, you'd work more. The government could raise taxes, but that's politically toxic. So it borrows instead, pushing the problem onto the next generation. We're expected to live within our means, but the government doesn't. This $100 billion T-bill is the latest example of that hypocrisy. The government takes out another massive loan while telling citizens to tighten their belts. The disconnect is staggering. The rules are different for Washington, and that's the heart of the crisis. It's time to ask, how long can this go on? This isn't just America's problem. The US dollar is the world's reserve currency, and T-bills are the foundation of global finance. Countries like China and Japan hold trillions in US debt as reserves. If America's financial house shakes, the world feels it. A US debt crisis would trigger global panic. Countries might dump US debt, crashing the dollar and spiking interest rates. International trade would stall, and economies worldwide would suffer. Developing nations with dollar-denominated debt would face disaster. The world's economic fabric is tightly woven, with the US as the central thread. If that thread snaps, the whole system unravels. That's why this $100 billion borrowing binge is being watched nervously worldwide. Our allies are looking for reassurance, but Washington keeps borrowing more. This can't end well for anyone on board. The stakes are global. The world is holding its breath. The situation is, technically speaking, bonkers. The government is borrowing at record speed and the crisis is heating up. What's next? There are a few paths, none pleasant. 1. Austerity, deep spending cuts and tax hikes. Painful, but it could stabilize debt. 2. Keep kicking the can, borrow more, accept slow decline, and watch living standards erode. 3. Sudden catastrophe. A political crisis or market panic triggers a global depression. The path depends on political choices made soon. Will leaders make tough decisions or keep prioritizing short-term gain? The clock is ticking. This isn't a drill. The choices in Washington now will shape generations. The indicators aren't promising. The pressure is building. The world is watching. Buckle up. After all this, what does it mean for you? The government's debt is your debt. The bill is coming due. This isn't partisan, it's math, and the math is terrifying. You'll feel it. Higher mortgage rates, pricier groceries, less job security, and threats to Social Security and Medicare. Decades of fiscal irresponsibility are catching up. What can you do? Pay attention. Don't tune out the big numbers. They affect your life. Demand honesty from leaders about the hard choices ahead. The $100 billion headline is a warning. We're at a tipping point. The decisions we make now will echo for decades. The window to act is closing. Fast.